Inflation has been rising, and many investors are wondering how to protect their hard-earned money. What if you could discover the strategies that not only protect you from inflation, but also help you grow your wealth even in the face of economic uncertainty? Stick around, because today, we're diving deep into the investment strategies that are making waves in 2026 and how you can leverage them to beat inflation. The rising threat of inflation. Inflation has become an undeniable force in the global economy. Across the globe, central banks are facing the challenge of keeping prices under control while stimulating economic growth. In 2026, inflation continues to be one of the biggest concerns for both individuals and investors. With prices steadily increasing, your purchasing power is being eroded. If you don't actively protect your wealth, the future could look grim. But don't worry, there's good news. While inflation can seem overwhelming, there are strategies you can implement to not only preserve your capital, but also generate significant returns that outpace inflation. Today, we'll explore the best investment strategies to not just survive inflation, but thrive in it. Why inflation matters for your investments. To understand why inflation matters, we need to first grasp how it works. Inflation is essentially the rate at which the general price level of goods and services rises, leading to a decrease in the purchasing power of your money. For example, if inflation is 3%, something that costs $100 this year will cost $103 next year. Over time, inflation can erode the value of your savings. If your money is sitting in a bank account earning a measly 1% interest, it's actually losing value in real terms. So, how do you fight back? Investment strategies that can beat inflation. There's no one-size-fits-all approach to investing, but there are strategies that have proven to help people protect and grow their wealth during inflationary periods. Let's break down some of the most effective ones. 1. Investing in stocks. Historically, stocks have been one of the best ways to outpace inflation. Why? Because companies have the ability to raise prices, increasing their revenues even when inflation is high. As a shareholder, you can benefit from this price growth in the form of higher stock prices and dividends. In 2026, stocks in sectors like technology, healthcare, and consumer staples are expected to perform well. These industries often have the power to pass higher costs onto consumers, allowing them to maintain profitability in an inflationary environment. For example, consider companies like tech giants or pharmaceutical firms. Their products and services are in high demand, and they can charge more when inflation increases. This can lead to higher stock prices over time. When you invest in these companies, you're not just buying a piece of the company. You're buying into its potential to grow and thrive despite inflation. 2. Real estate investment. Real estate is another classic hedge against inflation. In fact, many investors flock to real estate during inflationary times because property values tend to rise as the cost of goods and services increases. Additionally, rental properties can be a consistent source of income. As inflation pushes up rents, property owners benefit from higher rental income. Moreover, in 2026, the real estate market is expected to remain strong, with demand for both residential and commercial properties on the rise. Whether you're investing in single-family homes, apartment buildings, or commercial real estate, property ownership is a proven way to build wealth over time. For those who don't want to deal with the hassle of property management, real estate investment trusts, REITs, are an excellent alternative. REITs allow you to invest in a diversified portfolio of real estate without the headaches of managing properties. They also offer a way to earn rental income without owning physical properties. 3. Commodities and precious metals. Commodities like gold, silver, and oil have long been seen as reliable hedges against inflation. When inflation rises, the value of money falls, but tangible assets like gold and silver tend to retain their value. Historically, gold has been considered a safe haven during periods of high inflation, and in 2026, many experts believe that gold will continue to hold its value. Oil is another commodity that can do well during inflationary periods. As the cost of goods and services rises, the cost of production increases, which often leads to higher oil prices. Investing in oil, either through direct commodity investments or energy stocks, can provide solid returns. If you're looking for ways to add commodities to your portfolio, there are several options, including exchange-traded funds, ETFs, that track commodity prices. These ETFs give you exposure to the price movements of various commodities without the need to buy and store physical assets. 4. Inflation-protected securities. One of the most direct ways to protect your investments from inflation is to invest in inflation-protected securities. In the United States, for example, Treasury inflation-protected securities, TIPS, are a government-backed investment that increases in value with inflation. These bonds pay a fixed interest rate, but the principal is adjusted with inflation. So, if inflation rises by 3%, the principal value of your TIPS will also rise by 3%. This makes TIPS a great option for conservative investors looking to preserve their capital while still benefiting from inflation protection. TIPS are also a low-risk investment since they are backed by the U.S. government, offering peace of mind for investors seeking stability. 5. Cryptocurrency. While cryptocurrency is a relatively new asset class, it has gained significant attention in recent years as a potential hedge against inflation. Bitcoin, in particular, has been compared to gold due to its limited supply and decentralized nature. With only 21 million Bitcoins ever to be mined, many investors view Bitcoin as a store of value that can hold up against inflationary pressures. In 2026, the cryptocurrency market is expected to mature, with more institutional investors getting involved. This may lead to greater stability and mainstream acceptance of cryptocurrencies as a viable asset class. However, it's important to note that cryptocurrencies are still volatile and carry risks, so they should be approached with caution. If you're considering cryptocurrency as part of your investment strategy, it's essential to do thorough research and understand the risks involved. Diversification is key here, so it's best to allocate a small portion of your portfolio to crypto alongside other more traditional investments. The key to beating inflation. Diversification. One of the most important things to remember when fighting inflation is that diversification is your best friend. No single asset class can guarantee protection against inflation. By spreading your investments across different types of assets, stocks, real estate, commodities, bonds, and alternative investments, you can increase your chances of outperforming inflation while reducing risk. In 2026, investors should focus on building a balanced portfolio that includes a mix of inflation-resistant assets. A well-diversified portfolio can provide stability, reduce volatility, and maximize returns over time. Inflation may be a reality we all have to face, but it doesn't have to destroy your wealth. By implementing the right investment strategies, you can not only protect yourself from inflation, but also grow your wealth during challenging times. Now it's up to you to take action. Start building a diversified portfolio that includes inflation-resistant assets like stocks, real estate, commodities, and inflation-protected securities. Don't let inflation erode your financial future. Take control today. If you found this video helpful, make sure to hit the like button, subscribe to the channel, and share it with friends who need to hear this information. We'll be bringing you more valuable content to help you stay ahead in the world of finance. Thanks for watching, and remember, your financial freedom starts with smart investing.